May 12, 2025, House Republicans put out a new tax proposal.
Mm-hmm.
And a big piece of it is a potential shift in how that SALT deduction could work going forward. Let's break down what this proposed SALT change actually is.
Okay.
We also need to navigate the politics around it. And believe me, there are some interesting dynamics there.
Oh, for sure.
And maybe most importantly, we'll talk about what this could actually mean for you, for your bottom line.
Okay, so the headline is a pretty big increase to the current cap. They're talking about raising it from the $10,000 we have now up to $30,000 per household.
$30,000. Okay.
And that applies to single filers and married couples filing their taxes together.
But like most tax things, it's probably not quite that simple for everyone, is it? Different filing statuses.
That's right. If you're married but you file separately, the proposed cap for you would be half that, so $15,000.
Okay.
But here's a really, really key difference from now, this higher deduction. It wouldn't be for everybody.
Okay. An income limit.
Exactly. They're proposing income limitations. To get that $30,000 cap or the $15,000, if you're married filing separately, your income would need to be under $400,000.
$400,000 for joint and single filers.
Correct. And under $200,000 for married filing separately.
So that suggests maybe they're targeting relief more towards like middle or upper middle income families in those high tax states, not necessarily the super wealthy.
That seems to be the implication, yeah. It's a big departure from the current $10,000 cap, which, as you said, applies no matter how much you earn.
All right, no income limit now. So, okay, let's dig into the why a bit. Why do we get that $10,000 cap in the first place with the TCJA, and why has it been such a sticking point ever since?
Well, the original $10K cap back in 2017, a big reason for it was basically to help pay for the other tax cuts in that big bill.
Right, offsetting the cost.
Exactly. But it pretty much immediately became super controversial, especially as you'd expect in states with high property taxes, high income taxes. You know, think New York, New Jersey, California, Illinois.
Usual suspects, yeah.
Right. And the main argument from people, their lawmakers, residents, has always been that the cap basically forces them into double taxation.
Can you explain that a bit more? Double taxation.
Sure. It means you're paying your state taxes, your local property taxes, but then you can't fully deduct those payments on your federal return because of the cap. So it feels like you're being taxed federally on money you already had paid out in state and local taxes.
Okay. Got it. That makes sense why people would be upset. So this new proposal, raising the cap to $30K, it's clearly trying to address those complaints.
That seems like it, yes.
But it sounds like even within the Republican Party, there's maybe not total agreement that this $30,000 is the right number.
You're spot on. Yeah. Even tripling the cap, which sounds pretty significant, it might not actually be enough to get everyone in the party on board. There's this group, people often call them the SALT caucus.
Right, Republicans from those high tax states.
Exactly, and they've been pushing really hard for much bigger increases. Some even wanted the cap gone completely a full repeal.
And when you say much bigger, I heard some reports mentioning some, well, pretty eye-popping numbers they were looking for.
Oh, yeah. Reports were floating around suggesting some wanted individual caps as high as, like, $62,000.
$62,000.
And potentially $124,000 for married couples. So, you know, compared to that, $30,000, it's a step, but it's still way lower than what some in their own party were hoping for.
Wow. No wonder there's tension.
Definitely. And we saw some pushback almost immediately, like Representative Nick LaLota from New York, he went on social media and just posted, "Still a hell no." Pretty clear.
Yeah, doesn't leave much room for interpretation.
Yeah.
That really highlights the tightrope they're walking politically, doesn't it?
It really does. And it sounds like Speaker Mike Johnson himself has basically admitted that the whole SALT issue, quote, is still being resolved.
So, translation, they're still negotiating.
Pretty much, especially with such a slim majority in the House, this kind of internal disagreement, it really complicates things for getting the whole tax package through.
Right. And that's a key point for you listening. The SALT change isn't happening in isolation. It's just one part of this, like, massive Republican tax bill. You said nearly 400 pages?
Yeah, it's a big one. A comprehensive piece of legislation.
Okay, so let's zoom out then. Put the SALT piece in context. What else is in this broader tax package? What are the other key things they're proposing?
Well, one of the big ones is making those lower individual income tax rates from the 2017 TCJA permanent. Right now, they're set to expire too.
Oh, okay, so extending those cuts.
Right. The bill also apparently includes a temporary bump in the child tax credit, raising it to $2,500. And for anyone concerned about estate taxes, they're proposing to raise the federal state tax exemption pretty significantly, up to $15 million.
15 million. Okay. And what about businesses? Anything aimed there?
Yes, definitely. There's a proposed increase in the deduction for what's called qualified business income, or QBI.
That's the pass-through deduction, right? For small businesses, partnerships.
Exactly. That's really relevant for a lot of small business owners, freelancers, people with S-Corp. It could lower their tax bill. Reports are saying the deduction might go up from 20% now to maybe 22% or 23%.
Okay, so it's still a little fuzzy on the exact number there.
Seems like it, yeah. Still being discussed, perhaps. And also, something for homeowners, the bill aims to protect the mortgage interest deduction at its current levels.
Okay, so no changes planned there.
Apparently not. And then there are a couple of, let's say, more specific items related to certain types of income.
Oh, like what?
Well, it looks like they're trying to codify some campaign promises, specifically from former President Trump.
Okay.
The proposal would eliminate federal income tax on tips.
On tips? Wow.
And on overtime pay, at least through the year 2028.
Interesting. Okay, so yeah, definitely a broad package, lots of different pieces moving there.
Very comprehensive. It touches a lot of different areas of the tax code.
And I imagine it's going to affect a huge range of taxpayers, different industries.
Yeah.
Are we already seeing reactions from some of those groups?
We are, yeah. The National Association of Realtors, for instance, they've already put out a statement supporting the draft bill.
Okay. What do they like about it?
They specifically mentioned the higher SALT cap, the increased deduction for qualified business income, and keeping the mortgage interest deduction as is. Those are obviously key issues for them and their members.
Makes sense. So, okay, the proposal is out there. What happens next? Like, what are the immediate steps in Congress for this thing?
Things seem to be moving pretty fast, actually. The House Ways and Means Committee, that's the committee that handles taxes, they're scheduled to start debating it, maybe making changes, amendments, starting tomorrow, Tuesday, May 13th.
Tomorrow, okay.
And Speaker Johnson even floated the idea of getting a vote in the full House before the Memorial Day break.
Wow, that is quick. But that's just the House, right? That's only half the battle, if even that.
Exactly. That's just the first hurdle. If it passes the House, it then has to go over to the Senate.
And the Senate is different.
Very different political dynamics, different priorities over there. So you could absolutely see more big changes happening in the Senate. Or, it might stall completely.
Right. So while this House proposal gives us a pretty clear idea of what one group wants for SALT and taxes, the final destination still very much up in the air.
Very uncertain, yeah.
Okay, so let's try and wrap this up. We've got this House Republican proposal. Raise the SALT cap to $30,000 for many filers, but add new income limits.
Right. Under $400 or $200, depending on filing status.
It's clearly a reaction to years of complaints about the current $10 K cap, especially from those high-tax states.
Definitely.
But, even this $30 K plan is already getting pushback from within the Republican Party. Some wanted much more.
That's the internal hurdle, yeah. The SALT caucus factor.
And crucially, this is all part of a much bigger tax bill that wants to make TCJA cuts permanent, change the child tax credit, estate tax, business deductions, even taxes on tips and overtime.
A lot going on.
So the path forward through the House and especially the Senate looks, well, complicated. Changes seem almost inevitable.
Absolutely. And that uncertainty, really, that's the main takeaway for you listening right now.
Yeah.
If you live in one of those states with higher state and local taxes, or, if your income is anywhere near those proposed $400K or $200K limits, this is definitely something you need to keep a close eye on as it works its way or tries to work its way through Congress.
Absolutely.
Thanks for joining us for this deep dive.
It's been a pleasure.
We'll see you next time.
See you later.
Okay, great. That's a wrap. I'm Katie St. Ors, and let me send out a huge thank you for listening. If you want more content on personal finance and small business, head over and find me on YouTube. You can also find me on Spotify, Amazon Music, TikTok, and Apple iTunes. Thanks again for tuning in, and I'll catch you on the next Deep Dive podcast.